Welcome back to Yahoo Finance Live. We're moments away from the closing bell, and here to help us make sense of today's market action is our panel for the afternoon. We have Robert Schein, Blanke Schein Wealth Management Chief Investment Officer, and Terry Sawchuk, Sawchuk Wealth Founder. But before we turn to you both, we do want to get one last look at the markets as we approach that closing bell. And as a reminder, we are also awaiting earnings results out from Meta, the artist formerly known as Facebook, as well as Spotify and Qualcomm. So a lot to be keeping an eye on as we have the closing bell.
And there you had a look at the New York Stock Exchange closing bell, where it looked like Madison Square Garden was ringing the closing bell today. Taking a look at the U.S. markets here, Dow Jones Industrial Average, that closes up by about 0.6%, 223 points added on there. The S&P 500, you're seeing that also close in positive territory by about 42, 43-ish points there, 0.9% in gains. And rounding out the trifecta, or the hat trick on the day, 71 points in the green is the NASDAQ Composite. Tech-heavy average closes higher by about 0.5%. And as Emily had introduced our market panel, we want to get back to Robert and Terry. And Robert, first let's go to you, because when you think about what we've seen over these past few sessions to begin the week, have we been able to set in a bottom, and more likely going on over the course of these earnings reports that we're set to get from this point forward? How will that continue some of the momentum that we've seen in recent sessions?
Yeah, last week or so, extremely volatile. We're seeing earnings potentially could be bailing us out. Right now, you have S&P and the Dow above their 200-day moving averages, closing in on their 50 days, but the NASDAQ is we still need it to close above the 200-day from a technical perspective. That being said, if you look at earnings reports last night, or even what we're going to get after the bell today, big tech are cash flow machines. So that's also a great opportunity right now to choose your spots right now for the market.
Terry, I want to get your thoughts on this as well. What do you think about where we're headed after the volatile January that we saw last month, and how vulnerable are stocks right now for a further pullback?
Oh, I don't think we've seen the bottom yet. I think we probably need at least to go back and retest the lows. And then we'll see what happens there. They may hold, they may not. If you look at, we work with an algorithm with an outside firm. It went negative, and I think the trend is down. And when you look at the bigger macro picture, this looks more like a bear trap relief rally to me than it does a bottom by any stretch.
And so with that in mind, we're going to be hearing from the Fed as we move on throughout the rest of this year in March. All eyes are on that meeting. What are your expectations going into that meeting, especially considering the headwind risks that are posed, Terry, by the Fed, and not just how often they will raise interest rates going forward, but what the size of those rate hikes might look like?
Yeah, I don't think there's any chance we're getting a 50 basis point rate hike. That's not in the cards. I think the bigger chance, I think the Fed's going to back off of all this at some point. I think they're under, some political pressure right now to look like they're fighting inflation, so they're doing what they're supposed to do there. But when you look at $5 gasoline, when you look at the drop in petrochemical sales, you just look at the big macro picture, the lack of fiscal stimulus. Their bigger issue, in my opinion, their bigger policy mistake would be to drive us into a recession. And I think that's more likely to be an issue than inflation as we get a little further out.
Robert, in terms of the economic data, we got a major disappointment in terms of the ADP private payrolls report. About 301,000 private payrolls shed in the month of January. Should we be expecting a negative payrolls print on the jobs report that we're getting out on Friday from the BLS?
Well, the payroll number is definitely concerning, but I don't think it's going to stop the Fed from tightening starting in March. They're going to look through the data. They're well behind the curve. And so they're going to be more data dependent going forward in their messaging. This Friday could show us, again, just noise. And it's just showing that the Omicron virus has hit just about every business that I know and every across the United States. So I think it's this one data point where if you look at the bigger picture and longer term, the trend is still our friend as in terms of employment. I don't know of a business owner right now that's not looking for employees to work. So we're got a thriving, growing economy. I think the Fed's going to see that cash is in hands of consumers. Corporate profits are still there. 2/3 of the S&P right now have reported and have said, there's inflation concerns, wage inflation, and supply chains constraints. But I think that could moderate. But the Federal Reserve will turn data dependent, and I don't think they're going to be as aggressive this year as they once stated. And that's what January really volatility has come from.
Terry, thinking through the inflationary hedge that Bitcoin was talked about as previously, it seems that it's kind of shed perhaps that sentiment around it at this point in time. But I wonder, as a wealth manager and as someone who is looking across where there might be buying opportunities, are any of your clients asking about that at this point? And what are you advising on the front of Bitcoin and cryptocurrency more broadly, especially considering the talks of a central bank digital currency?
Yeah, so look, Bitcoin, there was a lot of talk around it being, an inflation hedge and a place to go if monetary policy gets out of control. It's really traded like a risk asset. And so we need to see a lot more money printing before I think that narrative takes on. Now, I think ultimately we need something like Bitcoin because to be honest, the thought of a digital bank, a central bank digital currency scares the hell out of me. And so I definitely would like to have something like Bitcoin available if and when we get to that point. So I don't think by any stretch Bitcoin is dead yet, but it is acting like a risk asset. So it's going to trade more correlated to what the stock market's doing until the world gets to a place where they're really worried that the dollar breaks down and gets devalued seriously. And we're not anywhere near that right now.
Robert, are you seeing opportunities outside of the U.S. and specifically U.S. large cap stocks right now? And if so, where are you looking specifically?
Well, we actually do like large cap, but we also look in the U.S. right now, specifically over, let's say, outside the U.S. And, I think we're seeing a lot of, the price change does not ultimately change the fundamentals. We're coming into, we like sectors like oil. We like sectors like financials, right? We have rising interest rates. Financials will be strong as a result. But oil, you look at what OPEC Plus did today. They're going to increase, the output in March, but at the same time, it could be too little too late because we are still reopening around the world. We haven't gotten corporate travel back yet. We haven't gotten everyone back out of their houses, if you will. Everyone's at home at Zoom. And so once you're back in the office and you have that travel back again, that's going to actually play into our thesis, which is oil is going to be strong this year. That's sort of the sector that's a global play. And that's why we like oil.